Welcome to a time to have a look at what happened in the markets. Starting off with the Asian side of things, those markets happened to edge back a little bit, and this is as investors try to grapple with the idea about whether an economic recovery or a global economic recovery that is might begin to stoke some pressures. At the same time, dealing with Japan's Q1 figures that came out as well, and we'll talk about our own Q1 figures that came out a little bit earlier on. But when we look at the Asian markets, the Nikkei down about 0.9%, and the Hang Seng down marginally. But then when you look at the mainland Chinese markets, they also seem to have closed a little bit lower. Shanghai Composite down 0.5%. The Shenzhen component as well in negative territory, down 0.9%. Looking at the European picture for now, those markets are trading a little bit higher as investors look ahead to Eurozone growth and unemployment data that is set to come out on that particular side. When we look at the markets, FTSE 100 down, rather up 0.3%, German DAX in positive territory, up 0.1%, and the French CAC also following suit. US futures muted for now, and I did mention that we had our GDP figures that came out as well, up 4.6% quarter on quarter, exceeding expectations. But when we look at the growth compared to last year, we are about 2.7% lower compared to last year, 2020. But to talk about all of these themes, we are joined by Matete Tulare, who is the head of FX execution at RMB. Matete, can you hear me?
I can hear you loud and clear.
Awesome. So, I mean, let's talk about the JSE performance now. What do you make of it?
So, look, I think, Tash, it's been quite an interesting day. I mean, we've recovered from the earlier lows that we saw to trade at the near highs of the day. I mean, obviously, all major indices are trading higher after that better than expected GDP number, the quarter one GDP number. But obviously also on the other side of the coin, I mean, obviously the Rand opened up the week on the back foot after gaining to 1341 highs, pending last week Friday's non-farm payrolls. I mean, what we've seen on the back of this is the Rand giving back some of its gains despite the global risk-on sentiment. And I think what we've also seen with another asset class is obviously the bond market, which has obviously rallied about 8 basis points on the back of the GDP number that we saw earlier this morning.
On that GDP figure, I mean, what did you make of it? I mean, I know that it exceeded expectations, but from my perspective, it's still a sobering figure.
So, look, I think, market expectation was for 3.2 and we printed at 4.6. The market suggestion is that obviously the rebound reflects the rally in the commodity prices as well as a strong performance from the financial sector. And I mean, obviously, what we've also seen when we delve deeper into the data is that it suggests there is possible spillovers from the pickup in the mining sector, obviously with the commodity boom that we have seen with the likes of iron ore, copper, gold, and coal prices all rallying. And also, I think a better than expected global recovery. And obviously, the record high commodity prices will benefit the country together if we have a delayed third wave, should see a lift in activity in the second quarter of 2021.
On that note, then, if someone had to ask you and say, you can be an economist for a day and give us advice on the, quick wins that South Africa can implement, quick short-term wins, what would you say?
So, look, I think we've been around the story and we've spoken. I think the market and obviously even the ratings agencies have come out to say, look, the elephant in the room is obviously Eskom and the electricity shortages. We really need to make sure that we start cracking on that. We really need to make sure that we also roll out the new renewable energy projects smoothly, whilst we're also decommissioning the old coal units so that obviously electricity supply is not impacted. The other issue is obviously the sustainable solution to the restructure of the non-performing state-owned enterprises. We have seen the likes of Thungela, SABC, SAA, etc., obviously all being in the news. Another issue is obviously the allocation of spectrum. That's also been a much anticipated debate as to how and when it's going to be rolled out. And also, I think another thing that we really need to focus on is obviously utilizing the tax revenue base efficiently. I mean, just from some forecasts that we have seen, I think just mining corporate taxes and the royalties, we are forecasting the fiscus to get about 82 billion rand from that, kind of mining corporate taxes and the tax royalties. That should also boost credibility for the ratings agencies if, government makes sure that they utilize the tax revenue base efficiently. And over and above that, I think it's also policy action. I mean, we really need to make sure that, things like mining charter really need to be finalized in such a way that it will drive and obviously increase foreign direct investment into the resources sector to drive our growth even higher.
Right. Before I let you go, I mean, you were talking about coal, and I have to ask you, what has been the market reaction of Thungela Resources, which debuted on the JSE and the LSE yesterday?
So Thungela Resources, it's an Anglo-American coal asset. I mean, that's been listed on both the JSE and the London Stock Exchange yesterday. For every one Thungela share, you need to hold 10 Anglo shares. But it's also important to note that Thungela is a very different investment case relative to the likes of Exxaro, whereby they've got large exposure to Eskom contract. Thungela is much more exposed to the spot thermal coal prices. So at the end of yesterday, they traded at 21 Rand a share with a market cap of around 3 billion Rand.
All right, Madidi, let's leave it there. Thank you so much for your time. That is Madidi Tulare, who is the head of FX execution at RMB, talking to us about the latest market developments. And of course, we will continue covering that tomorrow. That's it from me. We're going to take a quick break, and when we come back, we'll